Hi, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking British pound futures. Well, the rally continues in the British pound after the Bank of England meeting this week, where policy was left unchanged. But the press conference afterward, rather the statement afterwards, really tried to talk the pound up. And that really is an interesting way of dealing with the kind of situation they have, mainly that the pound is at a 14.5-month high. So about 2 and close to 3/4 of a year versus the US dollar. That's a pretty big rally, up above 135 today. Essentially, the Bank of England is following the bankers' playbook. Bank of England official Vlagi said that rates may have to rise more than once. So they're essentially trying to talk the pound higher, as I mentioned, and it's working. That is the central bankers' playbook. They will try and jawbone the market first. We saw Ben Bernanke do it years ago, and then Janet Yellen. We've seen Mario Draghi do it recently, driving the euro a little bit lower, opposite of what's going on here. And the Bank of England trying to strengthen the pound mainly because they have inflation, but they don't have wage growth. That means the weaker currency is essentially importing inflation into the country. When they go out into the public or the global markets, try and buy things with a weaker pound, it costs more. So that's where their inflation is coming from. So they're talking rates higher rather than raising them at the previous meeting initially to try and get some more strength in the pound so they can actually go slow with the rates. And the US data that's been coming out is helping. Obviously, we're talking about the level of pound versus the US dollar. And if the US dollar is going to be mixed to weak, like we saw today, the weak US data will help the pound and help strengthen the pound against itself by falling. It's a very simple equation. And we saw retail sales this morning, both the core and the headline number, down 0.2. The headline number was a miss. The core was right on where the analysts expected. So that weak data potentially pushes the US Fed back a little bit more, weakening the dollar. Sterling dollar continues to rise. This is Bob Iaccino talking British pound futures from the CME Group trading floor in Chicago.